Welcome to Henry Harrison's Entrepreneurs Business and Finance podcast, featuring CEO of Black Dog Venture Partners and host of VC Fast Pitch, Scott Kelly. Remember to subscribe and hit the notification icon so you don't miss an episode. Enjoy the show.
Welcome to the Henry Harrison podcast, Entrepreneurs, Business, and Finance. I want to welcome to the show Scott Kelly, who is the CEO of Business Accelerator, Black Dog Venture Partners, and founder of VC Fast Pitch. But he has a vast experience of starting businesses himself, of investing in businesses, networking with people to help them get funding for businesses, and on and on. Hello, Scott.
Thanks, Henry, for having me. I appreciate it.
So what are you doing now? Explain what you're doing right now.
What we're doing right now is helping entrepreneurs fund, scale, and exit their business. We're actually going to be hosting our next VC Fast Pitch event in Dallas, Texas, next Thursday in your neck of the woods. But that's really what we do. We love working with tech startups, consumer product companies, software, SaaS, and obviously AI companies to help them fund, scale, and exit.
What I also have learned about you is you've been on both sides, and really all sides, because as I said in my introduction, you started businesses and exit them yourself, which a lot of people can be great advisors and great investors, but they may not have done that. Right. But you've also been on the investment side, and venture capital can get a hard rap sometimes because it's a tough place, right? People don't want to lose their money, and a lot of people want to get money and are excited about ideas, and you must have a better appreciation for the entrepreneurial side, having done that yourself.
Yeah, absolutely. I was unfortunate in my career. I was an entrepreneur from a youth. At 11 years old, I was selling newspapers and trading, baseball cards, to earn some extra money. But then obviously as I got out of college and undergrad, I spent some time on the floor of the New York Stock Exchange in the early 80s, moved to San Francisco, became an investment banker and helped tech companies go public. I did that from 86 to 93. And then 93, during the dot-com boom, I became a founder for the first time. And I was fortunate to found and exit 3 internet companies between 93 and 2000. Left California, moved to Arizona, and I tell everybody that was my first unsuccessful retirement. After about 4 months of retirement, I invested in a record label knowing nothing about the music business. A few months later, our first artist went gold. And I spent 6 years in the music entertainment business. And then I sold that company. And that's when I launched Black Dog Venture Partners. And basically what was happening, Henry, is a lot of the later stage venture capital funds would send us companies that were too early for them. So we work with these early stage technology and consumer product founders to get them ready for investors, put in front of them investors, help them raise their seed to Series A, help them scale, help them build their team and go to market. And then down the line, either hand them back up to those later stage venture capital firms or take them all the way to an exit.
Well, and part of the reason why people don't, or big venture capital funds don't invest with the smaller ones is because scale, right? They raise a lot of money, and so they need to have larger deployments. But it's also because they can be riskier, and they're not up and running with revenue as much likely, and those kind of things. So it's an interesting space to play in. Obviously, if you get in early, it can be even better for you and the entrepreneur. But how do you handle that aspect of it? Or
I tell people you have to understand, in the venture capital space, it's very similar to baseball. If you can bat 300, you're in the Hall of Fame because it's a high risk business, as you mentioned. And I tell entrepreneurs, you have to understand that venture capital firms, they are using other people's money and need to get a return on that money. So they're very pragmatic about their investment. But I also tell entrepreneurs, understand you need to talk to the right investor and at the right stage. Quite frankly, of entrepreneurs honestly shouldn't even speak to venture capitalists. In all honesty, they should just go out and build and sell. But for those that are early stage and need a scalable business, you need to start probably with earlier stage investors, angel investors, high net worth individuals before you graduate to a large venture capital fund. But it is a risky business. And I tell people it's risk on all sides. It's risk for the entrepreneur and it's risk for the investor.
you mentioned in some of your writings and podcasts that you've been on that a vast network of angel investors.
There are literally millions of potential angel investors out there. And Entrepreneurs can start with friends and family. Obviously, high net worth individuals. Those are people that have retired from their businesses, exited their companies, and now want to invest in early stage companies. And then, like I said, as you grow, you more than likely will graduate to a venture capital fund. But there's a lot of opportunities out there if you're prepared to talk to investors.
And you mentioned the relationship, which is needed in the business of taking someone else's money. I mean, I think it seems obvious, but you almost can't stress it enough. Speak to that a little bit, because in my view, there's a lot of trust that goes into that. So there has to be a rapport, there has to be like aligned values, there has to be a level of trust and respect. And those don't just come because you send a pitch deck. I mean, we are in the age of AI and virtual, and we're on Zoom, but we're face to face and we're talking. And so we're building a relationship because we've just met, although I feel like I know you now after watching a lot of your posts.
And honestly, I tell most entrepreneurs, and the worst thing you can do is connect with someone on LinkedIn who has an investor on their profile and immediately put your pitch deck into their DM. That is, really a no-no. Raising capital is much like selling any product or service. You need to have a large funnel of qualified candidates, meaning these investors have to be interested in your stage of business and your particular industry of business. And then also you have to take those contacts and turn them into relationships. And like you said, you need to establish rapport with these investors. I tell entrepreneurs all the time, before you ask for money, maybe ask for some advice, or more importantly, ask these investors how you can be helpful to them. And that's really about establishing relationship. It's really like any business relationship. You've got to be willing to give first without expectation for a period of time in order to build that relationship.
Give us a little bit more about your two main ventures at the moment. I don't know which one you want to start with. It seems like they overlap in ways, but
Yeah, they really work hand in hand. Black Dog is, I don't like to use the term accelerator, but that's probably the closest analogy is that we're hands-on. When an entrepreneur comes to us, they have a problem that they want to solve, and they have people that want to buy that solution. Our job is threefold. One, to see if they can need the capital, and if so, help them get the capital to fund that goal. Two, help them build the team around them, because a lot of times, a lot of entrepreneurs, they might be a good tech founder, but they may not know anything about sales or accounting or legal or operations. So we want to make sure they have an adequate team around them. And then we help them in the implementation in terms of getting in front of partners, potential clients, and establishing those relationships. Those three things build a business. I really equate it to a three-legged stool, is that all three legs have to be working consistently and equally in order to make sure this venture goes forward. So that's a big part of what we do at Black Dog. These were entrepreneurs that had dedicated their time and resources to present their opportunity. And in the room, there weren't investors. There were other people giving them advice. And I think there's great opportunities to get advice and coaching on your pitch. But as I told my kids when we were playing sports, you practice because sometime you're going to have to play a game. And I tell entrepreneurs, come to my event when you want to get in front of active angel investors and actively investing venture capital firms. So what we have done is we have democratized the process for the entrepreneurs. We don't have a long, lengthy application process, but we do vet the investors to make sure they're active angels, high net worth individuals, or venture capital firms. So that's really what we try to create at VC Fast Pitch. And we've helped hundreds of companies, and we've raised over $130 million just from our events. So those are the two things that we really like to focus on.
and that 130 million was that I mean, for someone who's starting up, a few 100,000 can be the game changer. So I imagine it's
Absolutely.
not
Right. It was a lot of small, medium, and large checks.
Yeah.
Our check sizes range from 25,000 to 25 million.
I like the fast pitch thing. I went to SMU and they had an entrepreneur program. Had the students go to a fast pitch thing. They didn't call it fast pitch, but it was, I forget, it was something like a minute or 2 minutes. And when I went in, I thought at first, because I was learning, I thought, boy, that's not long enough. And then I realized it really is. If an investor if an entrepreneur can't explain their business, because it's not like the guy's going to, or person or woman, individual is going to invest after hearing that.
Right.
But they're going to say, okay, this is worth exploring. And they're going to rule out a lot of other ones that don't fit their paradigm or they don't think it is going to make it. And if an entrepreneur can't explain what they do really quickly, then they don't know what they're not, in my view, typically not adequately understanding their own business.
No, I agree. It's interesting you mentioned 1 minute. We do mostly 5 minute pitches now, but one of my most popular stories I love to tell is, oh, it's got to be close to 9, 10 years ago now. We had two entrepreneurs pitch for 1 minute in Phoenix, Arizona. These two gentlemen pitched their startup, and there was a gentleman from Sand Hill Angels in Menlo Park in the audience. They had lunch and got to know each other during the break. That same gentleman invited them to Menlo Park for a longer conversation. And during dinner in Menlo Park, they got their first investment from this person, a $270,000 check. A few years later, that same person led a $3 million round for that company. A few years later, that company exited their business, sold their business at a significant profit, and now they run Space Station Investments out of Utah that has 270 portfolio companies. So they went from pitching for 1 minute for their startup to now they're frequently on my panel listening to other entrepreneurs and potentially investing in there. So a lot can happen in 1 minute, but you're right, Henry. You got to be able to succinctly tell your story in three different blocks: a minute, 5 minute, 20 minutes. You should have that not just memorized, but internalized, because you never know how much time you're going to get with an investor.
I mean, 5 minutes is a good, I was thinking, oh, it needs to be 30 minutes or something back then. And I was
Yeah.
shocked and it was 2 minutes. But what was it like when you came out of college? Did you know what you wanted to do? You mentioned always entrepreneurial, so you must have that passion. But Wall Street, obviously, especially
Yeah.
then, the height of money.
I was a finance major and I thought I'd go into banking, become a banker. And then a friend of a friend, he introduced me to the world of finance and had an opportunity to work at a brokerage firm and work on the stock exchange. And after that experience, I moved to California. And after 6, 7 years helping other companies go public on the stock exchange, it was a Friday afternoon and I came home, told my wife and said, look, I quit my job. And she goes, what are you going to do? I go, I'll figure it out by Monday. And on Monday, I came up with an idea that I wanted to start, brought in a partner. I raised no outside capital. I funded the entire venture myself. And I was fortunate a few years later to sell that company. And that kind of perpetuated my journey as an entrepreneur. And I love the fight. I love the battle. I'm a salesman by nature and training. And so I love the ability to convince people to do things they wouldn't normally do.
And I imagine you're seeing every kind of business you can imagine.
I, on average, probably get somewhere between 200 and 300 pitch decks in my inbox a month. And that's honestly the second reason why we put together, the VC Fast Pitch events is that that's kind of a vetting program that we've used for companies we may either invest in or work with. Because honestly, as we mentioned before, if they can't intelligently and succinctly talk about their business for a minute or 5 minutes, they're struggling with their vision and they're struggling with their go-to-market and they're struggling with other pieces of their business.
Getting trained, right? Sure. And that doesn't mean they won't get there. They're just not quite there
Nope.
yet.
And that's honestly the reason why we do what we do. Every time, everybody that pitches at our event gets coached. They're coached with a specific topic they have to present during their 5 minutes. And our 5 minute presentations are timed. They get exactly 5 minutes. At our event, we did an event at Vanderbilt University about a month and a half ago, and I was there with a horn. At 5 minutes, the horn went off. In Dallas, I either will use a whistle or a small gong. I haven't decided yet. But they know they have exactly 5 minutes to get their point across.
And what were some of the stories of specifically of either a company that you started and sold or that you invested in that you think people would like to hear?
I was fortunate to be, in the beginning of the internet, much like where we are now in AI, the ability to take old industries and use new technology. One of our first businesses was a company that did online mortgages back in the 90s, where all the paperwork was done online and they got approved via an email. And that wasn't done before. And so we brought someone experienced in the mortgage business. We built the technology around it. And a few years later, we sold it to a large bank. We realized that early on, as when I was an investment banker, we helped MP3 raise $400 million. It was revolutionary what they were doing then, but now it's the only place and the only means is digitally how you get your music nowadays, for the most part. So it was fortunate to be involved in some really interesting industries. And honestly, the same thing's happening today. We're really excited at what, AI is doing for some industries like construction, property management, finance, marketing. That's the thing that keeps me going. We had some great success taking technology to turn old businesses into new technology businesses. And now we have the opportunity to do it all over again.
I guess younger people and entrepreneurs, it's funny, I was thinking back in early days, entrepreneurs it wasn't cool. They were thought of as quirky inventors in the garage as opposed to businessmen. And now companies want to have entrepreneurial and they want to have their own entrepreneurial incubators because they understand that still entrepreneurs create the more small businesses. I call them entrepreneurs, create the majority of jobs in our country. So we need all the big businesses, but we certainly need to encourage the entrepreneurs. And what do you see? Is it continuing to be exciting? Because I heard some people say, watch out, don't do it, with good advice. A billionaire said, hey, we were almost in bankruptcy for 5 years in a row until we sold. And because we're always reinvesting our capital. And hey,
Yeah.
it's risky stuff. It's not for everyone.
I think what we're seeing now is the ability to build and scale a business with less resources and less capital. And that's providing more opportunities for entrepreneurs to succeed. There are entrepreneurs that are using AI tools to build and generate revenue immediately. And I think that's really empowering for those that are taking advantage of it. And I think it's a new era. It's nice to see new technology empower entrepreneurs to become more entrepreneurial.
You find there's still a positive attitude among entrepreneurs, the can go get
But
it
I
attitude.
think I think there are people that lead the charge in terms of taking advantage of technology, and those that have to play catch up. And the ones that are leading the charge are the ones that are succeeding and avoiding the long journey and the long capital allocation process to succeed. But again, like anything else, the ones that are reluctant are going to find themselves either unemployed or working for some of these new tech startups.
One of the big international firms, it might have even been Goldman Sachs, they're encouraging, basically requiring all their employees, managers, everybody to spend a couple hours a day, quote unquote, tinkering with AI because everybody needs to be fluent in it.
Our staff is doing some form of weekly training on some tool, some AI tool, because honestly, it's much like the internet. So you need to be up to speed on these tools. And for us, like I said, we're using it to be more efficient in terms of due diligence, more efficient in terms of marketing, and we have our companies that are doing that to be more efficient and more successful.
Yeah. How many people come to a fast pitch gathering?
Yeah, we have two versions of it. During COVID, we went 100% online. And then after COVID, we have a blended model. So we do both an online event once a month and in-person events several times around the country. We try to keep the events relatively small on purpose. The events range anywhere from about 100 to 200 people on average because our goal is to make sure there's adequate time for the communication and the relationships to be built during the event. So, for example, in our event in Dallas, it's going to be a 3 hour event. We'll have 6 companies present, but we're also going to have several opportunities to have breakout sessions and let the investors speak to the entrepreneurs, let the entrepreneurs network. I find, I've done large events. I found for this event in particular, it's quality of the room versus the quantity of the crowd.
Especially when you're talking about building relationships. And it's crazy all the things you've been involved in. But one of them was event planning. Specialties. These are your specialties: venture capital, angel investing, private equity, business development, marketing, advertising, event promotion. That's those big ones you're talking about. Social media, online marketing, public relations, publicity, mobile marketing, mentoring, leader development, consulting, angel investing?
The reality is I've been fortunate to be involved in a lot of different businesses and do a lot of different things in my career. And the good thing is I can bring that experience to the table with the companies that we're working with or investing in. But I find at the end of the day, the thing I can bring to them most is perspective. I have made and lost millions of dollars in my career. And so it's always easy to talk about the wins, but honestly, your ability to overcome failure is what makes for a successful entrepreneur.
Yeah. Yeah, that's well said. And potential failures and almost failures and hurdles and obstacles and everything else. But yeah, most entrepreneurs have had failures and many of them big whopping failures. Yeah.
Exactly.
Elon Musk, he's close to bankruptcy a couple times, at least actually. And of course he made it through those okay, I'd say. Well, yeah, it's neat to be in touch with all the different types of businesses that are coming up. You can see what the weather is out there because you're looking at all the different types of businesses and where the energy's going, what's hot, what's not.
Yeah, I mean, it's great for me because I tell people, as I mentioned before, when I moved to Arizona, that was my first unsuccessful retirement. I moved to Florida 3.5 years ago, and I tell people that was my second unsuccessful retirement. For me, at this point in my career, I want to help other entrepreneurs become successful. And that's what gets me up in the morning is to find someone that has a really good idea and help them develop into a really good business that is well funded, executes well, and has a great end in mind.
Fantastic. Well, is that a good place to wrap up? Would you like to share anything else?
I would just encourage anybody listening in, they can feel free to visit me on my website at Black Dog CEO. Black Dog CEO is all my social media channels. If you're interested in our pitch events, you go to vcfastpitch.com. And if anybody listening in, we have a whole host of free startup tools that we can make available to anyone listening in. If they want to send an email to scott@blackdogvp.com with the subject line startup tools, we'll put in their inbox right away.
Well, I admire what you're doing, and I'm glad you're out there doing it. And I really appreciate you taking some time to come on the show. And I know people are going to like hearing what you have to say.
Thanks for having me.
Hey, thank you.
Thank you for watching Henry Harrison's Entrepreneurs, Business and Finance podcast here on YouTube. Remember to subscribe so you never miss an episode. You can also search Henry Harrison Podcast on your favorite podcast platforms.